A huge portion of Massachusetts condos are not purposely built condo buildings. They are conversions, triple-deckers turned into 3-unit condos, brownstones divided into condos, old apartment buildings and factories converted into ownership. These converted properties have unique insurance considerations that a building built specifically as condos do not. Today I'm going to explain what Massachusetts condo owners and converted buildings need to know. I'm Carlos Vargas and Vargas Insurance. We insure converted condos throughout the Bay State. Converted condos have characteristics that affect insurance in ways purpose-built condos do not. First, they are old. Most Massachusetts triple-deckers were built between 1870 and 1930. Brownstones are similarly aged or older. You're living in a building that is potentially 100 years old or more. Second, they're not designed as condos. The original building was one structure with one owner. Converting it to separate ownership units required dividing systems that were not designed to be shared. Third, they are small associations. A converted triple-decker has 3 units. A converted brownstone might have 4 or 6 units. Small associations have fewer unit owners to share costs, which affects insurance implications significantly. Fourth, shared systems are common. Many converted buildings still have shared heating systems, shared water heaters, or other interconnected infrastructure. When something goes wrong with a shared system, determining responsibility can be complicated. And fifth, they may have been converted decades ago under different standards. A building converted in 1985 may have documentation insurance guidelines that are outdated or inadequate for today's standards. The small association issue deserves special attention because it dramatically affects your exposure. In a large condo building with 100 units, if the master policy has a $25,000 deductible, each unit owner is responsible for $250, manageable. In the triple-decker converted to 3 units and has a $25,000 deductible, each unit owner's share is $8,333. That is a significant hit. Small associations also have less financial cushion. A large building might have substantial reserves to cover unexpected costs. A 3-unit association might have minimal reserves, meaning any major expense leads to special assessments. This is why loss assessment coverage is especially important for owners in converted buildings. Your exposure to assessments is much higher than a large building. We recommend higher loss assessment limits for converted condos, at least $50,000, potentially higher depending on your building's master policy deductible limits if available. Old buildings come with old building problems, and these affect your insurance needs. Electrical systems in older converted buildings may be outdated. Older wiring increases fire risk. If your building still has knob and tube or fuse boxes instead of circuit breakers, insurance can be hard to obtain or more expensive. Plumbing in old buildings is more prone to failure. Galvanized pipes corrode over time. Old supply lines and drains are more likely to leak or burst. Water damage claims are more common in older buildings. Heating systems may be shared or outdated. A building with shared boiler that is 40 years old represents different risk than a modern system. If a boiler fails in winter, all units are affected. Lead paint may also be present in older buildings built before 1978. While condos do not have the same landlord liability as rental properties, lead paint still affects the building and should be considered. These old building issues means that you may need higher coverage limits and potentially specialized coverage. An insurance broker familiar with older Massachusetts buildings is important. Shared systems create unique liability coverage and questions. If a shared boiler explodes and damages multiple units, whose insurance pays? Typically, the condo master policy covers the boiler itself as a common area equipment, but interior damage to the units may fall under your HO6. If a shared plumbing fails and floods multiple units, determining where the failure occurred in a common area or within a specific unit affects which policies respond. If the shared water heater fails and someone is scalded, liability claims may be against the association and the master policy's liability coverage response. Understanding what systems are shared in your converted condo and how they are addressed in your condo documents are so important. Make sure your HO6 has adequate coverage for scenarios involving shared system failures. Converted condos are Massachusetts specialty, but they come with unique insurance considerations. Small associations mean higher assessment exposure. Old buildings mean old building risks. Shared systems means coverage coordinated challenges. If you own a condo in a converted triple-decker, brownstone, or other conversion, make sure your coverage reflects these realities. Higher loss assessment limits, adequate building coverage for older building repairs, and the highest liability limit available. And an insurance broker who understands converted properties. In the next video, I'm going to show you how we build a comprehensive condo insurance protection plan for Massachusetts owners. Our process from start to finish. I will link that video here. And if you own a condo in a converted building and want us to review your coverage, reach out to our team for a free, no obligation review. The details are in the description of this video. I'm Carlos Vargas from Vargas & Vargas Insurance. Remember to stay informed and stay properly protected. I'll see you in the next video.